Hi there, welcome to Kneppy Invest. Another trading day on the ASX, done and dusted. Recording this video at 3:23 p.m. So the day is over. Closing auction is finished. Pretty good day on the markets, but I'll go through a bit of a overview of what happened on the markets, go through the sectors, that sort of thing. Now the day started off interesting, intriguing, disappointing. Two of the first three announcements, price-sensitive announcements released today were schedule of arrangements or takeover bids for companies. And usually, I think if it's a schedule of arrangement, more than likely the management of the company that is being taken over has agreed and thinks it's a good takeover. And one of these companies is a company I am trading right now. And typically, when I see a takeover bid for a company, you expect there's going to be a pretty good premium. When I say pretty good premium, I'm talking about 20, 30, 40, 50%, maybe even more than 50%. That is what I expect. Task Group, company I did own, had a 100% premium. That was a few weeks ago. So I saw this company that I do own, trading. I saw this takeover bid. I thought, this is going to be a pretty good premium. I think this takeover bid is going to be above $3. The share price the previous day was something like $2.40, something like that. And then I saw the price of the takeover, and to say I was disappointed was an understatement. And the very fact that management think this is good for shareholders took me by surprise. So I actually did go to Hot Copper just to see the overall mood of shareholders, and they are grossly disappointed. This is not a good price for this takeover. Shareholders are not happy with management. They think this particular takeover price is undervaluing the company, and I have to agree with them. So I'll talk about MA Offshore, and that's the company, if I forgot to mention MA Offshore in a second. And the other company that had a schedule of arrangement was McGrath Holdings, and I'm pretty sure that takeover premium was a little bit more than MA Offshore. Anyway, talk about these two in a second. So that was a pretty interesting start to the day. And there's a few other announcements I'm going to talk about in today's video, including an announcement that was released on Friday in regards to Rectify Technologies. So some of the other announcements I want to talk about today include Electro-Optic Systems, Kin Mining, ALQ, ADX, which I don't know what the name of the company is, and Archer Energy and Clarity Pharmaceuticals. But I'll talk about these announcements later in the video. First, going down this path. So I've talked about this in a joking way before, that eventually we might not have any companies on the ASX. So I actually went to this website called Small Caps, and they do have a IPO section that I really, really like. And they also have a historical IPOs going back to 2017. So we can see how IPOs have performed over the past 7 years. And if we go to 2024 and look at the amount of companies that have IPO'd in the first 3 months of this year, it is really underwhelming. Only 5 companies have IPO'd, and I think 4 of these 5 companies are mining exploring companies. I'm not sure about what Metals Acquisition does, but that company has a market cap of 409 million. So maybe that's not a mining exploring company. Maybe that is a mining acquisition company. Anyway, I went back through the years just to see what the typical number of IPOs we do see in the first 3 months. And 5 is well below the average. And we've had way more than 5 acquisitions or takeovers of ASX companies in the past 3 months, well above 5. It's probably been more like 20 to 25. So I just went back to 2021. In that year, and I list this by date, in that year we had about 25 IPOs in the first 3 months. And the majority of these IPOs did not really perform. Some of them did, but not really. But still, a plethora of companies wanted to IPO on the ASX back in 2021. If we go back to 2017 and look at the first 3 months, there was about 20 to 25 companies again IPO'd on the ASX in the first 3 months. Majority, maybe not a majority, but a lot of these companies are no longer on the ASX. Maybe they've been taken over, name change, or they've gone bankrupt. And went through the performance of all these IPOs. And to be honest with you, in 2017, majority of them really disappointed until we got to Kelly's Partners Group, up 605% since IPO. And the other good thing about this particular website is you can see the return since the company listed on the ASX. I should have mentioned that earlier. So Kelly Partners up 605%. And then we have Ordinate listed on the ASX 30th of June 2017. So I just wish I could go into a time machine and buy Ordinate at $1.22. Share price of that company is now $20.97, up 1,619% since IPO. You don't get that sort of return often in IPOs. Most of them are negative. Or TLX Pharmaceuticals IPO'd on the 15th of November, up 1,843%, beating Ordinate. Two companies I actually own right now. Net Wealth also IPO'd, up 481%. Anyway, so the main reason I'm showing you this is just the sparsity of IPOs right now. I think eventually it will pick up, but I don't know. I wonder if the ASX is concerned about this. And the other interesting thing is the market's at all-time highs. So why are companies really hesitant to list on the ASX? I just don't know. Is it because of private equity? Is it because there's really no reason to list on the ASX anymore? Because one of the reasons why companies list on the ASX is to gain exposure to capital, to do capital raisings, that sort of thing. I don't know. I have no answers right now. Anyway, let's have a look at how the markets perform today. It was a good day on the ASX, ASX 200. Let's just refresh this just to make sure everything's up to date. It should be almost up to date because time now is 3:30 p.m., which means the closing auction has been completed 20 minutes ago, which means market index trading views should be up to date because they're on 20-minute delay. The ASX 200 or some of these information in market index are up to date, but a lot of the other information is not. So ASX 200 up 53%. I wish 53% in one day. I would be retired if that happened. 0.53%. All odds 0.56%. Small odds, a little bit worse, only up 0.37%. All tech, good day, 0.95%. And resources had a good day today, 0.8%. So let's have a look at the different sectors. Everything in green except discretionary, which was down slightly. And when I say down slightly, I'm talking about 0.01%. Real estate had a good day. Energy, healthcare, both up more than 1%. Banks up 0.37%. Technology again up 0.95%. So really good day on the market, and it was wide apart from discretionary and utilities, which are both, well, utilities is, I was going to say, defensive. Staples is defensive. I wouldn't say discretionary is defensive. Definitely not defensive, but utilities is definitely defensive, and that was flat. Anyway, one thing I discovered, I think it's in news. I wonder if it's been updated yet. Stealth Group. ASX microcaps with a blue chip profile. Stealth Group. I own Stealth Group. Some good marketing coming forth for Stealth Group. That's good to see. It's getting, the name Stealth Group is getting out there. Okay, so they don't update this. I like this morning wrap, evening wrap they have, but it looks like the evening wrap won't be released until about 6 p.m. The morning wrap was really interesting to go through, but I won't go through this today. But you can just see what happened overnight. Geopolitics, economic news, central banks, international stocks, that sort of thing. So I discovered this today in the news section on Market Index. So I'm going to have to explore this website a little bit more. So a good day on the ASX. Hopefully your portfolios had a good day as well. Now let's have a look at some interesting announcements today. So I have about 5, but the first one I want to talk about is RFT, which they released an announcement last week. A couple of announcements last Friday. So the first one was at 3:08 p.m., board renewal update, and then another announcement, restatement to quotation. My thoughts when I knew they were going to go back to trading, my initial thoughts about how much the share price would decrease would be anything between 50 and 75%. Yes, between 50 and 75%. I was a little bit wrong, only down 47%, but the share price at one point in the day was down as low as 1.5 cents. So this company has been going through some problems with the board. I think the board either all retired or resigned, not retired, or resigned at the same time. And they had to, if you go through this board renewal update, it does talk about what happened, the timeline, what happened. But there's some weird things going on with this company, which I'm not going to touch upon in this video, but the share price down 47.22%. Don't really have to look at the chart because the chart looks absolutely horrific. In fact, it started to look absolutely horrific before they released this announcement. And the last time the shares in this company were traded were back in November of 2023. And the share price of this company moved into a downtrend just before this happened. Before that, the share price was in this long-term uptrend. There it is, the weekly chart, long-term uptrend. They were in the right thematic, the right theme, the right sector, but things have been going wrong for this company. So let's go back to the announcements today. Now, I've already mentioned 2 of the first 3 announcements released today were acquisitions or companies entering into a scheme implementation deed. This is not updating. Sometimes ComSec announcement page does not update. I can assure you, just before McGrath Holding released this enter into scheme implementation deed, there was another announcement from MMA Offshore, and that was almost titled the same. Let's hopefully, if I go to another date, there it is. It just went from 108. Oh, you'd think a platform like ComSec would not have all these teething. It always have these issues. Here we go. It's updated. There we go. So Fletcher Building had the first announcement, which is understandable because Fletcher Building is a New Zealand-based company. Updating CEO transition and board renewal. Didn't care about that announcement. So MA Offshore and McGrath Holding, the second and third announcement of the day, both had fairly similar announcement or titles. The only difference is MA Offshore, the word enters was capitalized, while for McGrath Holding, the word enters was not capitalized. Apart from that, exactly the same announcement. So I opened up the MA Offshore announcement and I went, oh, this is going to be fantastic. It's going to be a $3 bid, maybe a $3.20 bid. And I was so disappointed when I read the price of this takeover. There it is, $2.60. And they go through what premium it was, 11% premium to closing share price on the 22nd of March, which is Friday, and then go through a 91 premium to the company's net tangible assets. Who cares about that? 31% premium to the 90-day VWAP. Who cares about that? The share price is a well-defined uptrend. The share price is moving up. Why would you sell the company at a 11% premium to the previous share price? It should be at least a 20%, at 30%, 40%. I was going to say at most a 200% premium to the share price. This is a disappointing announcement. And then the MMA board unanimously recommends that MA shareholders vote in favor of the scheme. And I can tell you right now, MA Offshore are not pleasant, are not happy about this particular takeover. I don't know why the board is so pro this takeover, unless they've been talking with Cyan for like 5 years. Only then could that make sense. So Cyan is a subsidiary of Cyan Renewables, never heard of it, which is an offshore vessel portfolio company of Soraya Partners. And if they've been in communication with each other, MA Offshore and Cyan, for a while, they should have communicated, I think, that to shareholders. And maybe then we could have accepted $2.60. $2.60 is a ridiculous price for a takeover of MA Offshore. And that's just my opinion. Let's have a look at the chart for this company. No, it's always do that. MMA is Memoran something. So here's MA Offshore's chart. That's a weekly chart. So let's have a look at the daily chart. A beautiful uptrend. Why? Now, in saying all that, I bought it at $1.95. So that's like a 33% premium to when I bought recently, or most recently. I've been trading this company for a long, long time. And to be honest with you, if you bought, when I initially bought at about 50 cents, you'd be very happy with a 5-bagger during the last 2 years. Very happy indeed. But it's another company, potentially another company, that would no longer be on the ASX, just like McGrath. Now, I don't really care about McGrath. It's pretty sure it's a building company, construction building company. Chart all over the place. Share price started to moving up to an uptrend, but I don't care about that. And my mouse all of a sudden has just stalled on me. There we go, connection lost. And if you look at the weekly chart, nothing. Not interested in this company at all. Well, what wasn't interested in before this particular announcement. Anyway, so I won't talk about McGrath. Let's talk about electro-optics. So we already know that the company went into training halt. They're doing a couple raising. They announced today that the placement to institutions was successful. And when you see that particular announcement, the shares in the company start trading again. Okay, so the capital raising price was at $1.70. I thought $1.80 would be fair and reasonable. And if the share price went to about $1.70, in my opinion, this would mean the capital raising was unsuccessful. Because why would I buy shares in this company if I can buy at the capital raising price or possibly even below the capital raising price? And those institutions who bought at a significant discount to the share price are now going, why do we partake in this capital raising? Because we want to sell our shares at a premium to what we bought during the capital raising. And they can't do that anymore because look where the share price finished for Electro-Optics Systems today. $1.69.5, a share price lower than the capital raising price. So this, in my opinion, is a negative capital raising because the share price has fallen to the capital raising price. They could have raised $1.90 and raised more money with the same amount of shares, or if they wanted that amount of money, they could have raised less shares, needed less shares to raise. So in my opinion, this is a negative, a bad capital raising because the share price has fallen to the capital raising price. And I am trading this company, and I did not expect this. I expected the share to maybe finish at $1.80. They opened at $1.78. So I thought, okay, that's pretty good. I'll just sell at $1.80. But this, in my opinion, is a negative capital raising. Share price now is below the capital raising price. And to be honest with you, if you're a shareholder, you can just buy at a price cheaper than $1.70 right now. So you don't have to partake in the what do you call it? The SPP, the share purchase plan. And I can almost tell you those institutions who bought $35 million worth of shares are now kicking themselves because the share price now is lower than $1.70. And that's the problem with doing these discounts. Don't do big discounts to where the share price is. That's just my opinion. Even though the share price has run up a lot, this has put a brake on the momentum in the share price, has put a brake on the uptrend. And I think the share price of Electro-Optics will have trouble getting above $2 anytime soon. The only way is if they use this money really well and really grow this business using the money. And to be honest with you, I don't have that much faith in management that can do that. And you can see just how much of a break this particular cap raising has put onto the chart. Beautiful uptrend, and all of a sudden share price drops 20% in one day. Okay. Or more than likely, I will sell out my trading position in Electro-Optics, maintain my longer-term position in this company, but I think this has been a disappointing day for Electro-Optics and shareholders, and a really disappointing day for those institutions. And should have raised at $1.90. That's just my opinion. Kin Mining, let's actually go back to the announcement page. So Kin Mining released an announcement at 8:23 a.m. Company update. So I just saw the word company updates, or the words company update. I thought, let's have a look at this update. What was intriguing about this is the company owns or holds $47.3 million of cash, $38.3 million in Genesis Minerals shares. So that amounts to $85.6 million. And then I had a look at what the market capitalization of the company is. But I didn't actually have to look because the company states it right in the announcement. The market cap of the company is $70.6 million. So the company is trading below asset value. And those assets are cash and shares in Genesis Minerals. How did the company perform today? I don't know. Let's have a look at how Kin Mining performed. 5%. So still trading below asset value. In itself, that is interesting to me. Doesn't necessarily mean I will take a position in this company. Let's have a look at the chart. Share price has been on a tear since the middle of 2023, increasing from 3 cents to 6.3 cents. So it's more than doubled. But before that, the share price was on a massive dive, massive long-term downtrend. So intriguing announcement in regards to a company that has a lot of cash, a lot of assets, but they're trading below asset value, which is intriguing. Another company that released an interesting announcement at 8:29 a.m. I actually did write down these announcements in the Times. was ALS Limited. I always get confused whether it's ALQ Limited and the ticker is ALS, or whether it's ALS Limited and the ticker is ALQ. ALS to acquire full ownership and control of Nuvisa. Now, I was wondering whether that would be considered good by the market or bad, and the market said bad, down 4.81%. Let's have a look at the chart. And the reason I'm having a look at the chart, because this company did pop up onto my trading scanners, because it just moved into a resistance zone between $13.40 and $14. And I was thinking, if the market liked it and moved above $14, this could be a breakout. Whole reason I go through this process is to find companies that are potentially breaking out, but unfortunately share price dove. So this is not a potential breakout for ALQ. Then we move to another announcement, and I think a company called ADX Energy. This company's share price rose 100% about a week ago or so. Well discovery well cased for future testing. Now, what this announcement is in regards, I have no idea. It went straight over my head. But then I noticed the share price dove 36.8%. So I don't even have to open up this announcement to know the market didn't like it, do we? Now, what was interesting about this is I did actually have this company on my buy Australia watch list. So this is just companies that are looking interesting. Doesn't mean I'm going to buy them. But just what happened today with ADX Energy, you can just see the volatility in the share price of this company over the past 6 days. So share price rose 100% last Monday. Yes, last Monday it rose 100%. And now has gone back to where the share price was before that announcement. Share price has gone from 11 cents all the way up to a high of about 25 cents, all the way back down to 12 cents. That's the problem with these sort of companies. That's typically why I stay out of these sort of companies, because of the amount of volatility that can happen, and the company can release a good announcement or announcement that's perceived good by the market, and then the next announcement could be perceived badly by the market. You can see the results of that today with ADX Energy. Now on to Archer. Archer at 9:12 released an announcement that did intrigue me. Archer Materials, Archer and EPFL develop a single chip pulsed ESR microsystem. Again, over my head, but I thought this was going to be received quite well by the market. Was it? Yes, up 26.6%. Now, ASX has been looking interesting recently after looking not interesting for a long time. The share price has gone on a tear, and we started to see some pretty big volume coming in. You can see these spikes of volume in not consecutive days, but on the 23rd of February, and then again on the 11th of March. And around that, the volume was pretty good as the share price started to turn. So the sentiment in this company is starting to improve. Share price has increased from 30 cents to 60 cents. So it's doubled on the back of a couple of really good announcements. I think that there was an announcement released by the company on the 23rd of February. Share price on that day increased 35.4%. So, in fact, we can confirm that. What was it, 26th of February? We can confirm that with just by looking at the announcements from this company. No, nothing. Just the market getting overexcited, maybe. Archer miniaturizes biochip GFET chip design. So what they do just goes over my head, but it just sounds really exciting. Single chip pulsed ESR system. I'm pretty sure the company is pretty high, has a high market cap. Oh, not that high, 120 million. And the share price had been long-term downtrend, but I think maybe sentiment is starting to shift. But you'll notice if you do look at the long-term chart, there's been periods in the last few years where the market's got really excited about this company. So back in July 2022, share price went from about 50 cents all the way up to about $1, and then moved back into a downtrend. Back in May last year, share price went from 36 cents up to 72 cents, so doubled, and then pulled back. So both times where we saw the market really excited in this company, share price doubled and then pulled back. Guess what's happened here? Share price has gone from 30 cents to 60 cents. Is this the same thing as what we saw twice in the past 2 years? Maybe. I'm just saying maybe right now. The only difference is the volume. We've seen some really big volume coming in for Archer Materials. And the last announcement was Clarity Pharmaceuticals, and this was not a big surprise. At 9:51 a.m., if I could find it here, Clarity Pharmaceuticals went into a trading halt. This was a couple raising. This does not surprise me at all. And I think this particular trading hold more than likely won't be as a premium or discount to MA Offshore. And I think this particular capital raising will be more highly regarded, better regarded by the market, just because we know Clarity Pharmaceuticals eventually would have to do a capital raising because they have no money coming in the door. And this is a perfect capital raising because the share price is on a massive run. And the best time for management to do a capital raising is when the share price has gone on a fantastic run, like Clarity Pharmaceuticals. Now, you might say the same thing about, did I say MA Offshore? I meant EOS systems, not MA Offshore. So this particular capital raising will be more highly regarded, better regarded than EOS. And even though EOS went on a really good run, share price doubled, I don't think they really need to do that capital raising at such a discount because they had plenty of cash. The other thing I noticed is some shareholders were questioning why, since you have $71 million of cash, why are you doing a capital raising only $34 million? It just seems weird, particularly if it's a big discount. Anyway, so this is not about EOS. This is about Clarity Pharmaceuticals. This is a perfect capital raising. Possibly after capital raising, maybe I'll take a position in Clarity Pharmaceuticals. Okay, so let's have a look at the best performing companies and the worst performing companies on the ASX today, and then I'll show you two charts, Appen and Zip. Okay, so best performing companies today, fairly low volume, and then we have Archer Materials, probably the best performing company on the ASX because the other ones were really low volume. Noronex, I'll just open up Noronex. I've never heard of this company before. Did they release an announcement today? No. So really, Archer was the best performing company on the Ventura, up 25%. McGrath up 24.5%. That's a better takeover offer than MA Offshore. Other companies that perform well. Okay, nothing there that interests me. Oh, Metro Mining up 15%. Okay, let's list it by market cap. So MA Offshore is here, but up only 10.6%. Anything KMD brands up 9%. There we have Metro Mining, Medadvisor, Appen 11.6%, continues to be a plaything of traders, but I'll have a look at the chart in a second. So nothing else that interests me there in terms of top gainers. Let's have a look at the top losers. Rectifier, without doubt, was going to be the worst performing company on the ASX today. ADX Energy, I've already talked about them. Anything electro-optics is there as well. Nothing of interest here. So let's go by market cap. Jupiter Mines. I don't remember seeing any Jupiter Mines announcement, but I could have just missed it. And nothing really there. The last process announcement was released 12 days ago. Okay. Clover Corporation. Oh, the hits keep coming for this company. They released really bad results. Well, I think what we considered really bad results 4 trading days ago, and the share price continues to tumble. It just continues to tumble on pretty bad volume. No one is willing to buy a Clover Corporation just yet, and I'm wondering when the bottom is going to be. There might be a nice little support level at about 36 cents. And that would be the lows we saw back in 2017. Yes, 2017. Looking ugly for Clover Corporation. Pacific Edge. The reason I said that is someone did mention Pacific Edge in the comments of my video today. And that's all I want to talk about in regards to worst performing companies. So let's have a look at the two charts to finish this video off. The first one will be Zip. And what I'm going to do with Zip is look at the 1 hour chart. I don't know how to trade Zip because when you look at the daily chart, it looks pretty good. But the chart just looks, I don't know. There was some good buying today because the share price only closed down 0.34% or 0.5 cents. Share price was down as much as probably about 2 or 3% today. If you do look at the 1 hour chart, you can see a really nice uptrend in this. So this is maybe the way I would trade this. If I just see the 1 hour chart, remain in an uptrend, just play it like this. And then I want to see $1.52 get taken out. That was a previous high. And we just keep seeing the share price of this company get to new highs, new highs, new highs. So the next high I want to see is at least $1.52. So we'll say $1.53. Decrease in volume last few days, there might be a little bit of concern. Maybe the market is getting sick with the zip. The other one is Appen, just because this is a plaything for day traders, in my opinion. And to really have a look at Appen, let's have a look at the 5-minute chart, because when you look at the 1-hour chart, it's probably not fine enough. So 5-minute chart, you just see how this is a plaything for traders. And I'm wondering if they're seeing the same thing that I'm seeing right now. So the share price of Appen moved into a downtrend back on the 19th of March at about 84, at a price of 84 cents. And then it went into a 5-minute, downtrend, all the way down to about 56 cents. But at 56 cents, between 58 and 56 cents, we saw a lot of volume coming in. You can see this big volume coming in on Friday and started trading today. Yeah, today's the 25th. That could have been a sign the bottom has been reached. So really big volume coming in. And then the share price went sideways. And then we saw the volume dry up. That's another good sign. As the share price went sideways, no selling. So when you see the volume dry up, no selling. And that satisfied the day traders that there was no selling. There was no extra supply of shares on the market. And they got excited. Day traders became excited at about 1 p.m. At about 1 p.m. my time, so this would have been about 2:25 p.m. Sydney time, they got excited. And looks like it's moving back into a 5-minute uptrend. So day traders might have been saying that. Lack of volume as the share price went sideways, a consolidation period, exactly what I look for in a daily chart or even a weekly chart, consolidation period after big volume and a potential bottom. So even though this is a completely different time period than what I typically look at, 1 hour, or not 1 hour, a daily or weekly, you see the same signals. So maybe day traders look at the same things I do at a daily or weekly chart. High volume, really bad volume or decreasing volume as share price consolidates, and then the pickup in volume as people realize there's no more supply of shares on the market. And that's, I think, why share price of Appen rallied today, up 11.6%. Okay, that's all I got for today's video. It went a little bit longer than I thought. If you have any questions, any thoughts, leave those in the comment section of the video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.